Welcome to the podcast, Caroline. I checked your LinkedIn. You have 20 plus years in banking with Wells Fargo, and you moved from Europe to US, and you are a co-founder of a fintech company. Can you tell us more about yourself? How did you start and how did you get into banking in the first place?
I think I got into banking by accident when I graduated college in Ireland. And I was there thinking, I've got to get a job in banking. We're recruiting. And like a lot of people, you sort of accidentally maybe fall into your first role. I probably grew up thinking I wanted to be underwater photographer for National Geographic. And somewhere took a left turn into banking. But I worked in banking in Ireland, and Ireland had a financial services centre. It still does. And it had a lot of international banks setting up operations there. So going from an Irish bank, I ended up working for German, South African banks, everything to do with credit, bonds, trading asset-backed securities, and a mark-to-market book, a whole variety. And then I thought I was making a smart move in 2007. I had a mark-to-market book. And I thought at the end of 2006, I looked like a genius, but I knew it wasn't me. It was the market. And I also thought something's going to blow this up. And I had no idea what. I thought, hey, what I'll do is I'll move to credit. So I moved to a startup bank called Structured Credit Holdings into a credit role. And then the whole collapse happened. And we had a mark-to-market model. And in June of that year, our investors who were like Beck and Callion and Aquiline, we were the best investment they'd ever made. And by the end of July, we were kind of toast. Actually, there's been 2 books written by people who worked there. It was an amazing team. I actually met one recently the other week. We still say what a great team it was, but that was a roller coaster journey. So then somebody I'd worked with previously said, come join Wachovia on a credit role. They were in Dublin. My first day, my husband joked, he said, well, don't bust this bank. And then about 9 months later, I was saying to him, there's a run on the bank, and we ended up being taken over by Wells Fargo. That was a credit role. And then I got asked to set up global banking out of Dublin, which was Wells Fargo dipping into European corporate banking, setting up for clients who had large operations in the US where we could cross-sell. I did that for 5 years, started off as a team of 1 in Dublin, covering Western Europe. And if anybody knows Western Europe, that's an ambitious coverage.
Yeah, it's usually very slow.
Yeah. And it's big. It's a big geography. So I was asked to come to the US. They were forming a new team. And I was based in Chicago for 2 years on the corporate side. And then I got asked to come to a turnaround situation in New York, working on the global, what they call the global team. So a lot of international trading companies here in New York, smaller companies, more family owned. Couple of restructurings later, and I'm in corporate investment banking covering technology companies here in New York. I'd always managed to have roles where, even in Wells is a huge organization, where I was either building out teams, building out markets. I mean, when we first had corporate banking in Dublin, we'd no Wells systems. So we used Word and PDF to try and create a credit paper that looked like the Wells credit system. So it was lots of sticky tape, and it was crazy and challenging, but I kind of learned then that that's what I really loved.
Sounds like you started doing startup lifestyle in a corporate job.
Exactly. Somehow I managed to marry the two. And then when COVID hit, we all sat home and thought about what it is we really loved and enjoyed. In a big organization, corporate investment banking, and this goes for all the big banks, there's a box, there's a role that it fits into. I joined Angels. If anybody knows it, in New York is one of the biggest angel investing groups, most active in the world. I love what they do in terms of diversity and inclusion and trying to get more founders engaged and more investors engaged. And so I started investing there and spending some time in that space. And I was like, what, this is something I really enjoy. And then through a friend, I got introduced to IAMPASS, and they were tech guys. And I joke, I do everything but coding, but I could see what they were creating. So it's all about authentication and getting rid of tokens and persistent data and reducing your attack vector. And I could see from my own clients the losses that they were having every month through phishing scams, etc. So I could see the need for it. And yeah, I decided there was talk of a recession, that's the perfect time to go fully in on a startup.
Before we dive into the startup life and the IAMPASS story and what do you do with them, can you share more about that? You started a team of one back in Dublin, right?
Yeah.
When you started covering Western Europe, how did you build a team from one to many?
I was lucky in a way because great talent became available. Ireland was going through a banking crisis, so a lot of the national banks, they were kind of shuttered. And so there was talent came available. So I tapped people I knew in the banking sector and said, look, we're looking to build. Have you got any talent? And, people said, yeah, I've got some great people. And honestly, we can't support them. They're going to be looking at a window for the next 3 years while we go through non-performing loans. So that was a great opportunity. If you're building a team from scratch, the most important thing to find is people the right aptitude and attitude. Well, that applies anyway. But when you're building a team like this, there's constant change. There's no set model and everybody struggles with change. But for some people, it is just so difficult. So it was also finding people that could really roll up their sleeves and would be okay with us going down a path and then saying, no, maybe not quite the right path. But actually, one of the things I'm probably proudest is a girl who was working in the bank. I asked her, she came on board as my assistant, as everything. She's gone on now to head the client relationship service team in Europe. The girl that I hired to replace her in that role is now assistant vice president. So that for me is about finding the people with the right attitude.
You gave them a good training. If you compare it to the current situation, economical recession, inflation, and everything else, and you probably saw in fintech, there were a lot of layoffs in the big tech as well, though it's still not as bad as in the other sectors. You can draw any parallels between what was happening back in Europe in that year and now what you see in the market.
People got blindsided. I kind of joke in Ireland, people are investing in equities, thought they were diversifying by investing in all the Irish banks. And so they lost to me, a lot of people were really hurt by it, but also banking was the secure pensionable job and suddenly it wasn't. But you see people innovating and looking at the market differently. If you look at the stocks, you got to be overweight technology and everybody held that equity. And then it was also name your number for some of the bigger technology companies because talent was in such a shortage and suddenly that's changed as well. But what you will see is more innovation coming out of it as people take a step back. And sometimes when times get scary like that is when the best innovation happens. And we'll see something similar, but not without pain.
And then you basically moved to US. You started with Chicago corporate team. Fintech is flourishing in multiple US cities, but I'm curious, what is your take as a European on Chicago's weather, fintech weather as well? And then why did you decide to move to New York?
I always said if you could summer in Chicago and winter in New York, you'd have the perfect arrangement because the summers were amazing and they make the most of it. So I will say when I landed, I had to buy a new pair of boots and a new coat pretty straight away. So if anybody knows Irish weather, it's kind of bland. It doesn't get cold. It doesn't get hot. I arrived in January just to make the full impact as much as I could. I really loved Chicago as a city. It's sports mad. They're the nicest people until you put them behind the steering wheel of a car. And then they're not so nice. I told that to my brother who's visiting. I said, nice people, but when you're trying to change lane, just know they won't let you in. So I really enjoyed it. And we were having a great experience there. And our global head, actually, Sanjeev called me and he said, you walk to work every day, which I did. Mile and a half, and he said if you move to New York, people won't think you're so crazy with all your walking. Well, that's a selling point. And so we weren't really looking to make the move at that time, but he made it compelling. This would be a really good opportunity. So we came to New York. I was at an event last night and somebody put it well, you don't come to New York for the weather and you don't come for the spacious apartments. You come for the people, the energy and the ideas. And that's it. That's definitely New York.
Yeah. And you probably saw New York during the COVID up and down. Lots of people are saying that San Francisco is back and other major cities too. How do you feel about New York? Is it truly back for the fintech scene? What's happening?
It's taken a while to get back, but this is my view of New York and the fintech scene and the broader technology scene. There's a lot of collaboration here. I talk to people who spend far more time in the West Coast than I have. I would say it's not the same dynamic. I sit 3 days a week in a startup hub, and the collaboration there, trying to help each other. But just generally, if you go to any of the events, people are looking to support each other and want people to be successful. And that's the great thing about New York. And people will hear what you're doing and say, hey, I know somebody who could be a good connection, or let me introduce you. And people are really proactive about that. It's fun. I was talking to some people about their experience of different groups, and they were saying, like, in different countries, you don't get it. But in New York, because we're all a bunch of immigrants together, like a lot of us, or even if we grew up in the US, we may not have trying to find a real life New Yorker born and bred is sort of a rarity. So everybody's traveled from somewhere and everybody's trying to make connections. And maybe that's why we try to support so much.
Yeah. When you say about the support and connectivity, do you think it's more like a founder bubble or more like the ecosystem effect in New York?
I have found other founders really supportive, but I would say it goes beyond that. So anybody in the ecosystem, you get talking to them and they will hear your story. And then if they can help you, they will. And think about their connections in the network. New York people are really good at saying, hey, there's somebody in my network that could be of interest to you for whatever reason.
So here's a question for you. How do you compare an American banker to a European banker?
Their dress. If you go to London or Paris, it's way more formal. And that actually really struck me when I first, because I used to cover the French market as well as the German market. Oh, yeah. There, every guy had a tie, all suited and booted. So that is, and when I had colleagues visiting from Europe, you can leave that tie behind. You're gonna freak people out with that.
Let's dive more into the ecosystem partnerships and collaboration support. You switch the roles from banking to the fintech. It's all about the partnerships, integrations. How do you sell? How do you scale? How do you see this ecosystem playing to your favor when you build up the product and build up the customers?
One of the challenges for us is we thought about how do we integrate, and there is companies in the ecosystem like Sandbox Bank who are doing that, solving that integration problem. So they are great for a company like us. There's groups, there's Finovate, there's loads of groups both in Boston and here in New York. But when you think about scaling, it's where is the multiplier? And that's really hard in fintech. But there's a lot of incubators, there's a lot of accelerators, there's a lot of people giving access to data for startups. That's so huge. So there's a lot of energy around. New York really wants to lead the fintech scene as well. We want to own it. And we're working hard to do that. But there is a lot of support to help people get access to the data set, to really pilot it, understand it. And then there is companies within the startup scene that are sort of solving some of those scaling and integration problems. For instance, if you're selling to an established bank, like the legacy systems, 101 legacy systems.
It can be painful.
Yeah, and it's too much for a startup. But I mean, there is companies like Backbase, I said Sandbox Banking, that are sort of doing that integration. That gives startups an opportunity to connect with them, to look for opportunities. And because there's no way a little startup can solve all your integration problems with all these legacies.
You said that you're investing with angels as well. So you don't have just banker perspective or fintech founder perspective, you also have the angel investor perspective. You've been doing this for a couple of years, I assume, with angel investing.
Yeah.
How do you see the market changing? If you think about the same integration and piloting and sandbox integration, is it speeding up? Is it stalling? Do people do the same things or do they do it differently? What do you see on the market happening?
People are more cautious. So before it was like, if it sounds like a good idea, is it worth a small punt? Now people are saying, this sounds like a good idea, but is it validated? So if you build it, will there be a buyer? People are spending a lot more time trying to evaluate, does this get to revenues? Is there actually a market? Because you can build the most beautiful thing in the world, but if nobody wants to buy it, you're going south very quickly. There's a lot more focus on what that traction looks like. The valuations came down. I mean, I do recall like one of the craziest I heard was of a Series A round where a company raised 544 million, 420 million. The management took 420 million off the table at a valuation of 2.2 billion. Yeah, I don't see that working for anybody involved. Well, maybe except the management, you could argue, as they're in the
Yeah.
same parts or whatever at this point. But so things had got out of whack, but there's been a reality check and it's like, is this a good business? So it's definitely slowed down. I also think what I've seen on both sides is liquidity. A lot of people had either invested maybe in crypto or stocks, whatever, it took a hit. So people were feeling a lot poorer and investors didn't have the same access to liquidity. So that really, on the angel side in particular, and then VCs will always come across as being active because nobody's going to put a flag up and say we're
They'll always be
inactive.
selling.
Yeah, it always look like you're selling, you're interested. And so that's been hard for founders to know who is really active. I've heard people with concerns that there's going to be a lot of zombie funds because they just can't raise. That's a real challenge for founders. It would be great if everybody said, I am or I'm not investing. And really, when I say early stage, you mean Series B, not pre-seed. If everybody gave you that clarity.
I've seen a lot of that. Yeah. They have to sell to their LPs. Emerging funds probably won't be able to do so. For our audience listening, especially bankers that are looking to go into fintech and angel investing, what would be your one advice that you would give them? How can they get into angel investing with the banking background?
Well, first addressing angel investing, an angel investing group, and I know I mentioned angels, they're not paying me, but they do have an amazing deal flow, and seeing deal flow and being able to understand what sort of deals are coming to market and maybe just sitting on the sidelines for a little while until you get that cadence. Like they're pretty good in educating people who join as well. I would certainly recommend just getting to see the deal flow and understanding what the market looks like and asking all your questions. I've met a couple of people at various big banks who've said to me, I'm thinking about maybe I'd like to go to a startup. And my answer is, if you're like maybe, then you're not moving to a startup. You can't be half-hearted about going to a startup. It's a different animal. I don't think you accidentally kind of go maybe a startup. For me, it came to a point that I really wanted to be part of this and building something. And so not doing it wasn't an option. And I do think if you're going to a startup, it's all in. It's not like joining another bank and thinking, actually, maybe the last bank was better and see if I can get my old role back. It's not that animal. So I have talked to a few people I've met at various events and dinners, and they're like, I'm thinking about it. And I'm like, if you're just thinking and you're not sure, then you're not doing it.
That's a really good definition, going all in for the new journey, for the new founder role. I bet you had a lot of amazing experiences back in the banking career. Would you switch to the startup world earlier than you did it before?
Yes. Well, I can tell you, it's a lot more stressful, the startup world. There's so much more on the line. But even my husband would say, you are so much happier. It's because you're working with everybody who's all in too. So if you're banking large corporates, sometimes you meet with the assistant treasurer. And I know disrespect to assistant treasurers, but they have probably been given a small piece to mind, and it's a role. It's not their dream. It's not, they've staked everything on it. It's a different experience.
Do you think it's ownership or risk tolerance? What would be one word that help you define it?
For me, as I got older, my risk tolerance increased, which gets conventional. I went skiing earlier this year, and definitely I'm still skiing with Daisy, and that's not going to change. So definitely not taking risks there. I don't want to have regrets professionally. And if I didn't do it, I knew I was going to.
Somebody coined this on Twitter, the regret minimization framework. Would you regret this if you wouldn't do it, or if you would do it?
Yeah, that was totally it for me.
Yeah, let's switch back to the IAMPASS. I'm sure you had so many different prospects and so many different startups that you would consider to join. If there were some interesting companies, can you talk us through how did you evaluate them? Like, how did you make the choice that you're going to go with IAMPASS? How did you make the decision, and how did you weigh in different options that you were presented with?
I think I looked at it like you would as an investor. So there was one that was more to do with logistics, and I just couldn't see the scalability of it. Looking at investment, does this make sense? Do I see the opportunity? And then I spend some time, and with the help of some techie people, sort of evaluating the tech, because I joke my role is everything except code. I could see from my banking career just the need and the amount of real impact and dollar loss. I think when it comes to everything, is there an ROI that we can demonstrate to customers? And I could see that. I knew that was there. And then I just thought we could really scale this technology. And also talking to the guys, we have pretty much aligned worldview. There's no massive egos. Everybody is doing everything they can to move it forward.
It's different compared to banking.
Exactly. Very different. But for me, it came down to things like, does the technology stack up? And are these people you want to work with? Because it's not 9 to 5. You're going to be spending a lot of time with them. And we're all remote. We're on Slack morning, noon, and night, 7 days a week. You need to be able to have a really strong working relationship. And also when things aren't going well, to be able to have that discussion with each other and say, this didn't go as well as we hoped because we need to figure it out.
So you need to grow your team in the next stages and next phases as you start building out the product, the team, and so on. Do you see yourself being concentrated in New York, or would it be still a full remote worldwide and so on?
A couple of things. What I would say is banking brought to me a lot of process and discipline. Sometimes in a startup, depending on people's backgrounds, and they can be really creative, and we definitely have the visionary, but sometimes you need somebody who's saying, this is the process we need to follow, and it's not so exciting, but we need to do X, Y, and Z. Bringing that process and organization, and banking, you also have pipelines, your reporting, budgeting, all of that, you could bring that to it. When we think about scaling, so we definitely want to grow here more in the US, and we'll probably end up with an engineering team more built out on the West Coast. Look at Europe. So for instance, our product, we don't hold any PII. So we're good. Europe is a natural fit for us because of GDPR, because we comply with that. So I would see expanding there. Finance, sales, and marketing will probably be New York, because that's where I'm based. But I could definitely see us growing into Europe and maybe having a hub there.
Would it be Ireland?
Maybe Ireland, exactly. You do need to get people together, and sometimes it can be productive. But do you need people commuting, and do you need people in the office 5 days a week? I don't think that's necessarily. I know some people who work brilliantly remotely, and then for others, it's not a fit. That's going to be a change, because I don't think it's one size fits all.
Self-discipline. You said that you're going to see engineering more like popping up on the West Coast for you. It is interesting. Usually it's like a more expensive talent pool. Do you think it's related to some specifics of your product, or more like a reach or talent?
Our CEO, Kerry, who does machine learning, and our CTO are West Coast. For everything that's core, we have a lot of proprietary technology, and we'll want to hold that very tight internally. You
mentioned AI and ML. What do you think about ChatGPT, OpenAI, a bunch of recent investment from Google into AI players, and how do you compare yourself? I bet it's a lot of data science, hardware plays, lots of ML, GPU power, and so on.
We do employ machine learning. It's a lot around patterns. Obviously, I was talking to a university lecturer last night, and he said they're up in arms because now people can craft the results. And we're probably saying same thing said about the internet. People are just going to be Googling and copy and paste into their essay. So maybe how you test people is different. Maybe it's not essay based. Maybe it's project based and people demonstrating their understanding. So it's not AI writing it. I do think we're all going to have to pivot and learn. There's edge computing and a lot of machine learning and AI in our product. I don't see the new tools really impacting what we do. I mean, we have a lot to learn about them, and they're going to evolve over time. But it's interesting. I saw yesterday there is somebody who has developed a tool to actually reverse engineer and know if it was AI was the source or a real person. And he thinks because he feels that's important. So I saw that on LinkedIn yesterday. So now we're having people reverse engineering it. It's interesting. I wonder, I've been talking to a couple of people and they're trying to design things about disinformation. Is this a person? Is it a chatbot? Is it AI? So how that's going to play in could be interesting.
It's going to be a race for sure.
Yeah.
Do you think though, like that doesn't impact your bottom line that much in your technology and IP that you built so far? Do you think that will enable your competitors to move a bit faster towards your niche market?
That's a good question. And yeah, we'll be having chats about this next week internally. I feel the way we have done it, people haven't focused. So there's actually very few people in our space. There's loads of people in authentication, but not as we do it. Do they suddenly change their approach because of these tools available? That's a very good question. I'm not sure is the answer, because something we have to be cognizant is, I suppose the question it does raise for everybody is, Are your barriers to entry what you thought they were? That is probably something we will need to chew over, but for everybody, that's going to be a concern.
It's a very risk-savvy answer. Awesome. You are COO and CFO, so you're wearing different hats as a classic startup co-founder. How do you split your brain in between? One is very rigorous regulation-wise, and another one is like more open-minded when you need to be more creative. How do you structure your time when you work on different parts of your business?
I actually like the variety, but I tend to block time. So I love a to-do list, I have to say, and I love crossing items off a to-do list, possibly even more. So I tend to allocate. I have certain times where I know I'm more productive and creative, and then there's other times. So I can tell you morning and nighttime are my best times. So in the afternoon, I probably set the more mundane tasks where I feel like my brain is going to be as sharp as the morning or evening. I plan my day based on how I know I operate, but I also then just try and allocate blocks of time.
Yep, makes sense. So basically following the same process and structure.
Yeah.
So talking more about the process, and obviously in your background, you interact with a lot of different processes and structures and people and orgs, and you see all this chaos that's happening, especially in the early stage startups. And then they scale, they all face the same problem, how to introduce those processes. And I bet you implement some of those in your own company. What would be your recommendation to other founders, fintech or not, that struggle with implementing processes and basically it's their bottleneck to actually start scaling up and growing as a company? What would you advise them to do differently?
I have found talking to other founders, there's a thing even called Pitch and Run here in New York on the West Side on Mondays and Fridays at 9 a.m. And it's a great resource if you come across a challenge. But what I would have seen too on the banking side is everybody's rushing to the revenue model, and certainly revenues are important, but sometimes people throw any chance of margin away in that rush. So it's having somebody who understands the more operational side. What does the process look? It's not going to be pretty and it's not going to be perfect because you're a startup, but there is actually loads of free resources. So I heard recently of somebody who was doing maybe the second or third raise, but like weren't managing their cap or doing it on an Excel spreadsheet. Well, Carta's free version would have done that for you. So there is loads of resources out there, and it's talking to other founders and asking them what are they using. And there's great tools. We use Xero for accounting. It's incredibly user friendly. Managing your expenses, Gusto for HR. Like there's loads of tools that are targeted at startups that knows a startup.
Is it a certified CFO advice?
No, just like my own personal experience, just go out there. There's loads of tools for startups. You can't operate everything on an Excel spreadsheet. And there's loads of, how can we do this for less? Stepping back, like, so HR, you can't cut. You need to do your accounts. You need to pay your taxes. And there is tools out there. But if you have never operated in that space, you've got to lean on other founders and people out there. And also, if you're issuing a safe note, you don't need a legal firm to help you issue a safe note. There's loads of templates out there. Go to Y Combinator. There's lots of resources that can help you have great processes, but you may not know about them. So you need to lean on others to help you.
Yeah. So you would still recommend safe note, though I saw some people still do convertible notes these days, especially in the finance sector. How do you feel about it?
Look, I'm all about simplicity, and the convertible note was probably dominant, but a safe note seems to be taking much more of a prominent role now, and it's simplistic and it's easy to do. I remember our attorneys saying, just do a safe note. Don't involve us, that's cost.
You prefer that as angel investor as well?
Yeah, it's just very neat and it's easy for everybody to understand. And I think that's what you want as a startup.
I can relate to founders sharing about the technology and products that they use, as you said before, just ask. But I found that in the fintech space, there's so many like non-compete and DAs. And so when you start to understand what kind of banking stack you want to build, like what kind of partners you want to integrate with, what kind of deal you had, what kind of risk you're going after and so on. Have you seen anything like that in your industry when you integrate with other companies and build up relationships?
I have to say, because of what we do, so we're not holding anybody's data, which is the other thing. Customers all own their data. We don't hold it. So we don't have that same resistance. It would be different if we were having access to customer data and holding that data. So there's other people in the authentication space, lots of them do hold the data. We don't. That would cause resistance because then we're certainly in it. The way we structure it, we're giving people SDKs and libraries. If they want to reskin our app, we do it through GitHub. We're using a public version through GitHub. So we're purposely saying, we don't want to get into your code and we don't want to hold your data. But for some people, they're really getting very close to those finance companies. And I think those fintechs then they're getting resistance because now you've got very sensitive access to sensitive information and you could use this in some way. Like that is the challenge.
That's what happened to Plaid. And when you mentioned the legacy integration at the very beginning, there is a reason why there's so much legacy around it.
Yeah, absolutely.
And I guess in your case, it's part of the secret sauce because you do ML on top of the data. So you don't really touch it, but you can have the intangible versions where you can make decision in your product, you authenticate or you don't authenticate and so on.
The way we do it is each transaction we're making a risk assessment of based on the risk of the transaction and the client's risk policy. So everyone is unique. And we're identifying that that's a real person. That is the person who should have access. We're not doing AML KYC, although we have certainly talking to people about partnering on that because that would be very compelling to go to market with jointly with somebody. But for us, it's not like log in, log out. We could be anywhere. And interestingly, we have found that people are much more interested in us verifying the actual transaction. So is that the authorized person who's making that wire, who's transferring that NFT? Or for in-gaming transactions as well, all around the payments, is that the right person? Because a lot of them, if you are the bearer of the token, it doesn't matter if you're the right person or not. If you've got your hands on the token, you're in. So that's where we differentiate. But again, no, we're not holding or storing people's personal data. So
on your website, you list that you go after finance, after DeFi, decentralized finance, streaming, which includes gaming, and then content as well. What is the most exciting section for you as a co-founder?
The more I talk to people, there's lots of opportunity. And I'll tell you an example that has nothing to do with finance in a minute. But what really struck me actually a year before last, one of my oldest school friends, her two children, were having an argument with her because they wanted to buy Gucci sneakers for their avatars. They were 7 or 9 at the time. And she said, over my dead body. And they said, but what if we use our own pocket money? She said, still over my dead body. So to me, that sort of just blew my mind open that these kids who did not grow up in a household where Gucci sneakers were a thing, how that is changing, and the payments and how you dress your avatar, what we're going to see more with Web3 and just virtual reality and avatars. And then there's the whole thing. Say you want to represent yourself as some different version of yourself, or it is. I might claim I'm 5'3". I might decide I'm going to be 6 foot in my avatar or whatever. But there's also times where you should represent yourself because there's concerns about safety and ethics. And so it's a really interesting space. But I have a friend who works in consulting, and she's having all the retailers, especially the luxury brands, are coming to her and saying, how do we monetize this? If they're spending £20 on a Gucci sneakers, it's not cannibalizing the in-store sales. It's a new revenue stream. That space is really interesting. That sort of excites me. One that we came across recently is healthcare. And healthcare data is obviously very sensitive and people want to authenticate and secure that. And it was a group that are building a fertility data platform. And they were worried because they would hold women's health records that they would become a target for hackers. And I was like, wow, but there is so massive sensitivity there. And would patients or their clients end up being criminalized because of what might be in their health record? So that was kind of sort of stunning. For me, a lot what you see in gaming is coming across to fintech. Fintech is getting very gamified and it's go-to-market. There's some people doing some cool stuff about evaluating the ESG metrics of your own investment portfolio. There's also a lot happening about increasing access to financial literacy. And there's some really great sort of gamified solutions on that. So that's really exciting as well, because it's really making a much more democratic process. And now suddenly everybody's getting much more useful tools. And people who possibly weren't bankable or didn't grow up in a household where there was savings, or maybe people were financially illiterate. I always think, and I apply this to Ireland, as well. If everybody left high school being financially literate, knew how a credit card statement worked or a bank statement and the implications, and could cook a reasonably priced, nutritious meal, then that would be a win. But it seems like we're a bit away from that yet.
Yeah, it sounds like you're going to be teaching next generations on the examples of NFT tokens. How can you actually have a financial literacy and understand all the transactions and value and so on? How long did it take you personally to actually move from this understanding of the banking mindset, where you spend a lot of time, and then you are talking with different people in the tech space, NFTs, DeFi, blockchain, Web3, all these fancy buzzwords? As a co-founder of the fintech company, what do you think about it?
Banks are really struggling what to do with it, and the regulation around it, especially if you're a SIFI bank, because then the regulations that you have to adhere to are a different standard. What really struck me is the problem is with a lot of the cryptocurrencies, they're not widely held. So they're open to manipulation. People either are fans of crypto or they're not. And I actually think we saw great use of it in Ukraine when people wanted to get money into Ukraine and banks closed, etc. So that showed like a great use case for it. You can say DeFi, but there has to be some controls. We've seen so much recently with just malpractice. I'm not sure you can get away without regulation. I know everybody says that's an ugly word, but there's a lot of people who've lost an awful lot of money because of unregulated companies behaving immorally.
All right, tough question. Can regulation be a code?
It probably will be. There's a lot of people doing stuff in reg tech. So we probably will see that in a couple of years. I would be surprised if we didn't. I feel like there's an opportunity there.
Yeah, I remember Boston FinTech Week, and those regulators still using faxes today. We definitely need more and better than that.
Look, regulation has really struggled with it. And then you have lobbyists, and what you need is somebody taking a cold, hard look at it. Maybe we'd see reg coming through in code format, and maybe that solves the problem. And certainly people are struggling to keep up with it and not appreciating the risks.
Do you think CBDC is another buzzword? Is a step forward towards solving this problem or a step away?
Let's see what happens, but I'm a little bit skeptical.
Your experience with GDPR, and you saw how it rolled out in Europe. Do you think layering CBDC with something similar to GDPR, where consumers and institutions and players get back a bit more control rather than just centralized solution, would be helpful?
We'll come to a point where we own our data. I'm going to go back to healthcare. So say your health records and you get referred to a consultant, you should be able to give them access to your health records. But if you're no longer attending them, you should be able to pull it back. Right now, you don't know who has what health data belonging to you. And that's sensitive information. We'll see a point where we own and control the data and how it's used. GDPR is great in that there's people looking to protect data. The biggest impact I've seen is websites. In Europe, you had to set terms. And now if you see like, oh, is that what GDPR is? I have to click another box on a website. So that's what it felt like. But I do think it'll come to owning your own data.
Yeah, it makes me think about the open banking in Europe. It was almost smooth, but a bit slow as implementation. Here, you are able to revoke some of the data with some of the bankers only like 7 or 8 years after the implementation, which is pretty crazy for the privacy and data owning part.
Yeah. You can make inquiries. You can ask what's held in you. Who really has, if you were to do that for everybody who holds your data, that's a full-time job in itself. And it shouldn't be so hard. So that's why we'll move to model where I own my data, you own your data, and you decide who has access to it and when they have access to it.
So this belief about owning your own data, is it the core to IAMPASS business as well?
Yeah, so we actually do have a solution where you can give and take access to data, to documents from your phone. You don't need a third party or an administrator to do it. And we're looking at that. We have a couple of use cases where really sensitive data. If you think of M&A and banking and the Chinese walls that are supposed to exist, I mean, this would be a way of sort of enforcing it as well. But I do see that moving. I decide who has my data, and I know who has my data.
And would you say it's more like in the health tech space, or is it industry agnostic?
Healthcare is just kind of obvious because it's so sensitive and it's hard to know who has your data. But I would think, like, for instance, if you change insurer or bank provider, you should know who has what. Because again, that's data about your income, your life. you should have owned that data. So I see it playing across.
You touched in the very beginning that you are not exactly as other competitors are doing just authentication. I assume Okta and other players like that. So how do you position yourself in terms of your unique selling point? And you touched base a lot about the ownership, about the privacy, about the security, about ML and AI models. As a business, how do you position, how do you carve out that niche for your segment?
We're not single sign-on, so there's no password or token anywhere. Your challenges, if I'm honest, is if you Google, say, passwordless authentication, you get loads up that I wouldn't regard as passwordless, because if there is a persistent token in the chain, that's a password. If you get sent a link to your email to click on, what's your email protected by? Password. So I suppose we have a purist view of it, but where we differ is, one, we truly have no persistent token in the chain, and two, it's adaptive. So it's step up. So for instance, if you were to be sending a large money transaction, you would want a lot more security around that than if you were logging in to read a Medium article, for instance. You shouldn't be treating everything as the same because it's different risks. And we're making that risk assessment in real time each time. And your digital signature is unique. It lasts about 12 seconds. So even the data we pull to create that signature, it's not the same data every time. So it's like a matrices model, and the size of the matrices sort of reflects the risk, etc.
Is it like a mix of like OTP, one-time password, and fingerprinting in a way?
No, it's biometrics. It could be anything you want, but we would say probably facial and voice. Fingerprinting apparently is less secure, and I hear this from security people. And then it takes environmental biometrics. So we'd take in stuff like what's the Wi-Fi, registered device, IP, location, time, date, stamp. And then we use machine learning to identify patterns. People tend to do things in patterns. Say your battery went dead and you wanted to log in. So you log into your bank from your friend's phone, and you could use, if they were using IAMPASS, we would say, okay, but that's not the registered device, so that goes to the highest level, so maybe we need to use voice recognition. But if you're doing the same thing in a low risk transaction that you've always done from the same Wi-Fi IP, we might say, oh, just unlock the phone.
So it's not just blocking, but also enabling the end result.
Exactly, yeah.
Super interesting. Makes me think about the retail implementation. So much data in retail with Wi-Fi, with the foot traffic and so on. This could be really interesting. The Amazon Go shopping.
Yeah, like at the moment we're focused, like as you said, on our website, where we think we can quickly show ROI. We always joke that if Netflix used us, we would solve their revenue problem because there's no credentials to share. But then our CEO would probably become the most hated man on the planet. So,
all right, if anybody from Netflix is watching us, reach out to Caroline.
Yeah, feel free to, or any streaming service or software licensing. If you've no credentials, you've nothing to phish, hack, or share. And 47% of phishing attempts are successful, which is a stat that people find mind-blowing. But then look what people put out there: their kids' birthdays, their kids' names, the name of the dog, the favorite places they holiday. I could probably sit down without even using technology and figure out their passwords. People, I don't think, appreciate the amount of social engineering that goes into it and the technology behind it. And people are putting so much out there. Now it's actually Gen Z are the biggest threats of data breaches. Everything is connected. They're hyper connected. They're putting everything out there. They're the ones at risk who are not concerned. We're doing some talking with some and trying to understand. And they were saying, we also think we don't have really valuable assets because we don't own a house or a car. We don't have valuable assets. We're like, well, you have all your data is a valuable asset.
The age of Facebook when your data is monetized is almost over, hopefully. So do you think it's partially a problem because the DeFi, NFT, and Web3 industry in general, when we talk about the Gen Zs and assets, digital assets they own, is just not mature enough in terms of cybersecurity, fraud, and risks protection?
There's a couple of things driving it. One, you have the development of, say, a lot of low code, no code applications, and you maybe have teams that have some functional expertise. So say if it's a fintech app or if it's a healthcare app, but won't have cybersecurity expertise in the house. So what they do is create a great product, and then before it ships, typically slap alphanumeric string requirement on it, and out it goes to market. So that is possibly part of it. But we actually went to Web Summit in November in Europe. And what really struck me was a lot of people, a lot of the companies who were doing lots in crypto and blockchain, particularly around crypto and NFT assets, were just, when you asked them about security, they were like, buyer beware. They had bought cyber insurance. And I was really shocked actually about the lack of, I'm not going to mention any names, but there were some I would not touch with a barge pole based on that. But they were just very nonchalant about it. And so cyber insurance is a thing that is changing because that's predominantly written out of London. And the underwriters are making a loss in cyber insurance. So that's not a sustainable model. It's going to be a lot more scrutiny about not just have you 2FA or MFA, but what is the strength and how robust is it? With a lot of managers and SSOs, you've seen a lot of hacking, a lot of phishing, and they've had breaches. There is going to be a change in terms of the quality of how you're protecting your end users. But certainly right now, with some of the new companies with Web3 and with, especially around tied to NFT assets, that the companies coming to market had very little interest. They were just very nonchalant about it. And so cyber insurance is a thing that is changing because that's predominantly written out of London. And the underwriters are making a loss in cyber insurance. And so that's not a sustainable model. So you're not going to there's going to be a lot more scrutiny about not just have you 2FA or MFA, but what is the strength and how robust is it? So with a lot of managers and SSOs, you've seen a lot of hacking, a lot of phishing, and they've had breaches. So over time, there is going to be a change in terms of the quality of how you're protecting your end users. But certainly right now, with some of the new companies, especially I felt with Web3 and with, especially around tied to NFT assets, that the companies coming to market had very little interest in the well-being. And that's not all, because we're getting business from Web3 platforms who are like, we do not want to be breached. We want our clients to own their assets, to feel secure. That undermines our business. If people's assets are being stolen,
it's better for business. Sounds like business like yours is well positioned to address exactly this problem and bridge the gap.
Yeah, well, that's certainly our plan.
Almost makes me want to ask you when is your next round, because that sounds like a really big problem to tackle.
We're kicking off. We've been part of for the last number of weeks, the Ready to Raise program out of Bolster in New York. The Bolster are a group. They've a number of programs for founders. So we're part of that. We're actually looking to raise 2 million.
That's going to be a seed round, right?
Yeah, we're excited about that because we've done all this development internally with a really small team. So this will allow us to build on what we've done so far and to scale and just make the most of the opportunity out there.
All right, we can jump for a moment into the Blitz questions. What is your favorite fintech and why?
Oh gosh, I really like what Stratify are doing because they're trying to take the bias out of the credit process, which every bank says they do. But when you look at the outcome of the data, all the banks have failed. So if somebody can fix that, that's great for the marketplace.
Who do you think is the most influential person in fintech?
For the wrong reasons, in some ways, I'd say like Elon Musk, the way he moved the cryptocurrencies, Tesla's quarterly earnings are too influential for...
It was smart to dump it before the market crashed. What is the recent book that you read?
Read 40 Songs by Bono. Well, it turns out I did know incredibly well read, really thoughtful, self-aware, and kind of self-aware. He knew his own shortcoming. It was more interesting than I was expecting.
What is your favorite thing to do in New York City? Besides walking.
Well, actually, I love Madison Square Park because I don't live too far for it. So that became my refuge during COVID. So going there for coffee, sitting there for coffee early in the morning is one of my things.
Yes. And same question, but in Ireland.
In Ireland, it would be the west of Ireland and it's outdoors. The weather's probably terrible, but I'm hiking.
What is your advice to folks who are trying to get into banking today?
I'd probably look at the smaller banks for opportunities. There's a lot doing neobanks and doing interesting stuff in the tech space. I would also say investment banking, it's sort of oversold. I ended up running with somebody in the park and we just had the same pace and he'd left investment banking and he said, because I lay awake at night going, will I get the call? Will they pick me? And then going, but the other person has better golf club access. And he said, I started to wonder what my education had been.
You should start a running group for bankers in New York. What would be your advice for people that want to get into fintech space?
I would think just try and immerse yourself. There's loads of events. Follow the groups on LinkedIn, find out when the events are on, go network, meet people. You'll learn so much, and it's a very welcoming community. And that allows you to dip your toe in and understand what it's about.
Quick follow-up question. What is your favorite fintech event in US and then in Europe?
FinTech Week in Boston was really, really good this year, and things haven't happened in person for a couple of years, but I actually felt the networking, the content was really good.
Yeah, Money 2020 in Las Vegas is also not bad, but they charge crazy pricing.
That's not startup friendly.
It's not, but it's banker friendly.
I know when I was at Wells Fargo, there was gaggles of people went, the same from the other banks. So for a startup, it's not quite the right audience. You need to be a bit further along.
Very general question. What do you think is the future of fintech?
It's going to be where we all have a lot more control. We are making choices about our investments based on whatever criteria we want, some form of ESG or not. We're taking the control back, and we'll see a lot more competition, and we're going to see a lot more people participating because the access for everybody is improving. So it's really positive, but we're going to have more ownership as individuals.
That's a good answer. And anything else you want to add for today's episode?
No, but I really, really enjoyed it.
It's been fun. Can you tell the people that want to reach out to you and stay in touch, what would be the best way and medium to find you and connect with you?
Yeah, so you will find me on LinkedIn, Caroline Wharton. There's not that many Caroline Whartons on LinkedIn, luckily. And also Caroline at IAMPASS.com.
Awesome. Thank you so much, Caroline. It's been a pleasure.
Thanks, Eugene. Really appreciate it. Great to talk to you.